Hey everyone, let's go through a quick earnings snapshot recovery on hopefully Snapchat tomorrow. Boy, we'll talk about that in a moment. But let's start with Google. So here's some of the big things I'm looking at when it comes to Google. First, I was surprised at the lack of artificial intelligence spend that we're getting for equipment at Google. Obviously, it's too soon to expect any kind of massive movement from Google services. We would obviously expect that at some point in the future, Google AI services might see some form of a boost. Here's Google in after hours. We expect that in the longer term, right? Over the next decade, certainly a year from now to the next 9 years thereafter, we would expect a lot of great AI revenue to come. We've got the AI hype, but we don't have the AI revenue yet, and that's okay. A real investor here wouldn't really be expecting AI revenue at this point. What we're really looking for, though, is that investment into the future. And I was a little bit surprised when I was looking at the Google numbers that we didn't spend that much more on R&D, only about $700 million more, and we didn't spend that much more on investing in plant, property, and equipment. In fact, we're actually below the pace of where we were last year for plant, property, and equipment spend. I was slightly surprised by that. And so some of the other takeaways that I had from Google, that's probably the biggest negative that I had with Google. The rest of the report, I have to say, made me optimistic about Google again, and I actually haven't had exposure to Google in quite a while. So what made me optimistic was that quarter-on-quarter growth on cloud, you're up 28% year over year on cloud and 7.7% quarter-on-quarter, fantastic. Search actually growing again, you're up 5% on search. YouTube ads up 9.5% quarter over quarter. That's double the year over year trend. These are not recessionary numbers. These are signs that cloud spending, search spending, and YouTube advertising all up. Where it seemed like you took a hit was on third-party spending. Third-party services, those declined for advertising, but otherwise search, YouTube ads, and margin on Google Cloud. Excellent growth. You also had fewer expenses for general and administration as the company's becoming more efficient. This led them to expand their overall gross margins to about 57.2% from 56.2%. So great job here, Google. Less G&A, less spending on equipment, which makes me a little worried about going into, hey, should we be spending more? But they are pulling off more margin, and they're growing in segments they weren't growing in any previously. So this is fantastic. Now, on Microsoft, something's also impressive here, though maybe a little bit less impressive to the market, given that Google's up about 6% in afters right now, and of course, earnings calls could change these. You've got Microsoft down about 1% here. But something regarding Microsoft that was very interesting in comparison to Google was what was happening with their spend. Let's talk about that. A quick reminder. Coupon code expiring tomorrow for those programs on building your wealth, where we do fundamental analysis every day the market is open, and we talk real estate investing, real estate analysis, property management, entrepreneurship, fundamental analysis for stocks, technical analysis for stocks. You want to join those live streams every morning as the market opens. Check those links down below, and then of course enjoy the actual lectures that come with those programs as well. If you have any questions, email us at staff@meetkevin.com, and we'll take care of you right away. Use that coupon code before tomorrow, as that's expiring soon. So with Microsoft, Microsoft actually grew their plant, property, and equipment spend 30% year over year, with actually much of that in the last quarter, 23.7% growth from Q1. This to me is a little bit more of an aggressive push into AI than what I think Google is chasing. So I'd like to watch these two companies, but if I right now had to make a guess as to which company was throwing more money into AI, I would guess it's Microsoft. The earnings calls could change that, but this is some of the initial impression that I have here. Also impressed by Microsoft paying down another billion debt, $5.7 billion in share repurchases, $5 billion in dividends. This is a cash cow. They have a 70% gross margin. This is a cash cow. Really phenomenal. Now, no guidance yet, though, so things could change for Microsoft. Visa indicated travel demand is still strong. They beat on estimates. We're just getting beats and beats on top of beats by these companies. This is a sign that we're not trending into a recession. If anything, we're actually trending much more towards a recovery than a recession. These numbers, phenomenal. Very excited by them. With the exception of course of Snapchat. Snapchat's daily active users grew. They're actually up 14% year over year, but it seems like they're heavily focused on investing in their direct response business and really retooling their ad business. In English, they are behind on the advertising game. They're trying new things to pay creators more money, hoping creators will bring people to Snapchat, which creators are doing more, and it's obviously working in the DAU numbers. But are those valuable customers that brands want to advertise to? And has Snapchat figured out how to actually appropriately help advertisers get conversions, especially after that Apple transparency tracking update that really bogged everyone in the advertising space for quite a while? One of the best alternatives, by the way, to this has been Trade Desk, specifically because Trade Desk has a tool of avoiding the need for Apple transparency tracking and instead uses this software called UID2. It's a version of cookies tracking, and a very, very, very high-level overview of it is basically trying to see how do certain people behave where we know what they are, what person, like sex, age, location, whatever, what details we know, how do they behave, and then how do people behave where we don't necessarily have their details, and then we're going to find some kind of alignment with those without actually tracking the people who don't opt in. Trade Desk believes that with the UID2, which is now open source, they actually only need about 10% of people to be logged in or provide permission to track to be able to form highly effective converting ads. This is something that obviously where Trade Desk has figured it out clearly, and you can see this on just the stock performance as you zoom out. Snapchat has not yet. This is the week chart here on Snapchat. This is the week chart here on Trade Desk. Obviously, volatility in every market that we look at. For little giggles here, you've got Tesla looking a lot like Trade Desk, up about 30 bips in the after hours. Google now at 7%. Very excited to see what happens as we go forward with more information on these companies. But look, have to say, if you haven't invested yet in yourself, in this kind of environment, you haven't yet invested in yourself by checking out those programs on building your wealth, considering shadowing me in person when we go look at real estate, or we're here in the office, or just joining the live streams or getting the access in the lectures, email us. Tell us why. Just say something like, why I'm not buying the courses, and send McKay an email, and we'll work together on them either this afternoon or tomorrow. We've got an expiration tomorrow afternoon, so we'll be pretty busy in email. I am running to, actually, where are we going right now? We got to fly somewhere. I don't even know where we're going right now, but I got to run. So anyway, thank you so much for being here. Really appreciate y'all, and we'll see you again hopefully soon once I figure out this studio setup, which by no means I'm even close to figuring out yet, so bear with me with the technical stuff. Thank you so much. We'll be back in the other studio first thing tomorrow morning. Thanks, folks. Goodbye.